One last swig. Okay, hello and welcome to Pairs of Aces. I'm one of your hosts, Adam Lemon, and joining me as my co-host is Huzefa Hamid. I am the director of content, the chief analyst at DailyForex. I've been there for more than 10 years. It's about 12 years now. And I write signals and analysis and oversee the production of all kinds of material to our site, dailyforex.com, which is basically designed to help people learn about the world of Forex and CFD trading and to become a better trader and to find the right CFD or Forex broker for them. So what we're going to talk about is really all about trading. Why should you listen to us? Sorry, actually, before I get into that, let me tell you just a little. I've finished telling you about myself. I am the chief analyst at DailyForex, and I'm mostly a trend and momentum trader. I'll trade all kinds of things. I'll trade Forex. I'll trade commodities, which I'm especially fond of on the long side, but I'll get into that. And now over to you, Huzefa, for your introduction and our very first episode of Pairs of Aces.
Thank you, Adam. Thank you. So I am Huzefa Hamid. I am based in Toronto, born and raised in England. I'm a technical trader, first and foremost. If anybody asks me about my trading, I think that's the first thing I think about. And when I say technical, I'm talking very old school, classical technical analysis. My Bible for trading is Technical Analysis of the Financial Markets by John J. Murphy, written in the 1980s. If anybody knows that book, like those support, resistance, chart pattern type things, you'll know exactly what I mean. For me, I think it's just timeless stuff. I'm a multi-asset trader. I don't think many traders these days trade multiple assets, and I'm no different. I trade 7 major Forex pairs. They, for the longest time, were my bread and butter, but I started off in UK equities and moved to US equities and then equity options. Today, I trade a couple of other futures contracts, S&P500, NASDAQ, crude oil, gold. I've been working with DailyForex. My goodness, Adam, it's been a solid 15 years.
I was going to say, I've been doing it for 12 years. And, I'm kind of like the daddy of the company, not only because I'm pretty much the oldest person there. Yeah, I am. And I'm the oldest person there. But I've been there longer than almost anyone, or anyone who comes into the office every day. Put it that way. That's for sure. But then I remember you were there even before me.
So this isn't,
working offsite. But you were already there. You were established.
I'm the longest person associated with DailyForex who's there today. I always joke with Anat and the Tammy that you guys should have like a picture of me in your hallways.
Well, actually, we probably will. We've had the place done up and we've got logos around, so you could be the face, or I think collectively we are the face. We're like I don't know. I mean, I'm English too. I would say Morecambe and Wise, but that dates me pretty seriously. I don't know, Skinner and Badil.
Oh, that's a great throwback. I do like them. They're brilliant. I miss Frank Skinner. My goodness. Yeah. For episode 2, we'll find another analogy, another British pair.
So this sounds kind of arrogant. Like, why should you listen to us? I kind of hate that pitch. I mean, why should you listen to us? I wouldn't put it that way. Like, what are we doing here? And who are we that you should bother listening to us? I'll put it that way. Both Huzefa and I are profitable traders and investors. I'm not Warren Buffett. I haven't made out incredible or outstanding returns. I'll let Huzefa make his own claims for himself. But I did basically more or less teach myself, although I come from a financial background. And it took a lot of work and a lot of questions. But I got to a point where over the long haul, I've made money. So I'm here. I mean, it's my job anyway, but I genuinely want to tell people the things that I wish people had told me when I was starting. So, Huzefa, I know like with traders, you probably always, even when you're doing well, you think everyone's doing better. It's this huge kind of FOMO. But my gut feeling is you're probably a better trader than me, and you're a more active trader than me. I know that for a fact, because these days I pretty much just trade the daily charts. And my methods are very much based on trend and momentum, which kind of, you tweak it, but the script writes itself. But
Adam, I love the daily charts. Firstly, there's nothing wrong about the daily charts. I look at the daily charts. It's still, I get some of my best trades off the daily charts. Anybody starting to trade, I'd want them to look at the daily charts. I think that's just
second that.
Yeah. The reason I think you should listen to us, and I don't think it's an arrogant thing to say. I've spoken twice this year at the Money Show events, once in Vegas, once in Toronto, and God bless the attendees. Like, some of them have flown from different parts of the world to attend these types of events. And when I watched other speakers speak as well, I wanted to know why on earth should I be listening to you? And I wanted to outline at the beginning of those talks why people should be listening to me. And this is no different. We're asking you for your time, I guess, and your attention.
Yeah.
And
Exactly.
Over that 15-year period, I went down many rabbit holes as a trader. I took courses, I read books, I listened to people, followed blogs, subscribed to live trading rooms, you name it.
And you were very young when you started, weren't you? If I remember right.
Yeah, I was in my late teens, mid-teens maybe. I was 16 when I started trading UK equities.
You were like one of those teenagers you hear about on the on the news. It used to be years ago. And finally, a teenage trader operating from his bedroom has brought the Chicago Mercantile Exchange to a halt. Do you remember that? Do you remember that guy? He was spoofing on like a crate. He lived near Heathrow Airport.
Yep. And I remember them. Yeah.
He was like some 15-year-old kid in his pajamas, and he was
There was another high school kid, or in England, a secondary school kid. He set up an entire a prospectus for an IPO. Kids have done some great things. I loved it. I'm happy they did it. I don't know if it was totally legal. I don't think their intent was malice or outright fraud. It was just yeah. But Adam, I had a part-time job at Burger King. I saved up a few £100 working evenings and weekends. And my dad, first of all, I couldn't open a brokerage account because I wasn't 18, so I had to open it under my dad's name. And then I didn't have the minimum balance. I think it was either £1,000 or £2,000, and my dad topped it up for me. And then I was buying shares, like this Man United stock I bought at one point, Marks and Spencer stock, some other big UK names, just buying, going long. I made money, but also the UK market, the UK equity index was right. The FTSE 100 was rising, so I benefited from that. It was nice having that positive start. I won't lie. Like, I know people say failure teaches you a lot, I'm sure, but I'm glad I just didn't get kicked in the arse immediately. I'm glad I just had a bit of a nice start, and I just grew my account from there. But fast forward, why should people be listening to you? Because I think I've been through so many learning experiences, talking to other people, courses and whatnot that I mentioned, and some of it was fantastic and some of it was not so great. And it's painful thinking about some of the money I've thrown at ideas, but also the time I've lost. There was a point where I chased a singular idea for about 18 months, and I stopped trading profitably Forex to chase this idea that I'd read about, which I'd read. And in the end, I made the decision that the person who was promoting this idea was not telling the truth. But it was a lousy 18 months to find that out. And I think now I want to give a level of guidance to people, talk about what I think is important in the markets. Yeah.
Right. Yeah. I actually spent, I think, about a year day trading, thinking that I had enough money to do it. And I really didn't. And I just burned a fair chunk of my savings really for about a year, thinking I was going to become this real full-time trader. But I learned so much from that. Like, it kind of taught me not all the what nots to do, but it did teach me some hard lessons. My start was a lot harder. Like, I think that would have been good for me, like you say, like to start with some success, because it depends on your psychology. Like, I find it hard to kind of be happy with things working well. Like, I'm kind of tend to be a bit pessimistic by nature. But then it's hard to take losses. Like, I would actually say one of the hardest things about being a trader is accepting that you're going to take losses sometimes and just watching the money vanish. and, having to kind of keep stepping up to the plate, even after a series of losses, when
Yeah.
you're watching your money shrink, is really, really hard. And that actually was the main block for me. Everyone has their thing, or everyone tends to have their thing that can make it hard for them.
Adam, though, going through an early stint of day trading isn't a bad thing, because you do a tremendous amount of repetition and the learning curve just gets suddenly shorter, and you find out very quickly if something's working or not. And yeah, it's not the worst thing. I know it sounds like contradictory to what I said in terms of looking at daily charts, but starting out, you want a level of frequency, you want a level of activity in there.
Yeah. I can
Yeah.
see where you're coming from with that. So this is the very first episode, and I asked ChatGPT to tell me how many podcasts fail, because you can't beat ChatGPT for reliability. At least I hope so. Apparently, get these stats: 47% of podcasts have 3 or fewer episodes. So we're already like getting up to that halfway point. Even with our first one. A common definition of early pod fade: only 32%, about a third, ever reach more than 10 episodes, and only about 10% have what you might call any kind of long-term success. So I was just thinking that this is actually very similar to the amount of traders that do well. 90% of podcasts fail, 90% of traders fail, or so they say. I would say that's probably an accurate stat, and I think we know that now because the brokers in Europe have to kind of report it.
Yeah. It's similar, though, to any kind of entrepreneurial activity. I think 8 out of 10
Bingo.
businesses fail. And
Bingo.
with podcasting especially, it's such a low barrier to entry. And I think a lot of the people you'd ask, we're doing it. Before, to have a camera in your face, you had to be associated with to be backed by a media company. But now, we could use home equipment. Here we are, getting on with it. But I think a lot of those podcasts, though, that quote unquote failed, is people just trying it out, and they wouldn't call it a failure. They'd say, "Look, I tried it," and I think that's fine. I think that's kind of buried in the stats, and maybe it's buried in the stats of traders as well, that quote unquote fail. People who've got a reasonable amount of disposable income, and they're like, "Yeah, let me give it a shot." They feel it's not for them, and I think that's fine. I wouldn't call that a quote. As long as they haven't lost a chunk of their life savings, I think it's I failed at trying many sports. I can tell you that right now. I'm a highly failed athlete.
Oh boy, I don't know how I'm going to follow that. I mean, it's interesting that so many stop before 3. You'd think you'd get to like maybe 5 or whatever, but I guess I don't know. Maybe people have wildly unrealistic expectations, probably like they do, or they can do with trading. So let's get into the market anyway. Enough of all this small talk. What's going on? I think there's 2 things we've got to talk about that anyone in our position should talk about. One is the roaring US stock market at very high valuations. Number 2 is, and maybe there's some connection there, we are, daily Forex. So let's start talking about Forex. Forex market has kind of been in the doldrums a bit. It's been quiet, low volatility. And I think we saw around April or March when President Trump first, suddenly everyone realized, oh my gosh, he's actually going to put these huge tariffs on all these imports, and the threats are real. And suddenly people saw big chunks of their export market to the US declining in profitability by maybe 30% or 50%. And it sent a lot of currencies, especially currencies that had a lot of exposure to China, countries that were going to get hit in a big way. It sent the currency market absolutely flying all over the place. But then it settled down. Right now, for about 3-4 months, I think about 4 months, I think we've seen quite low volatility. And it hasn't been the most exciting thing to trade. Why do you think that is? Like, I think it's interesting that the Forex market's meant to be very volatile, and it can be very volatile. It tends to be actually quite a quiet market. And people think it's risky because of the leverage. But in my take is that it's central banks want things to be quiet and stable. So there are forces working behind the scenes to keep the Forex market quiet and stable. What's your take on the Forex market right now? Do you think it's going to carry on like this, or do you see some kind of catalyst on the horizon that might liven
Yeah,
things up a bit.
the only analogy I have to the cyclical volatility is the equity markets. There are periods when the equity markets are very quiet, and there are periods when it's roaring. And in the early 70s, there was a period where the equity market was so dead, quiet, that people doubted the validity of the market. They thought the equity market
My
may cease to
uncle was
exist.
a stockbroker in the early 70s. Like, he was just getting going, and
Yeah.
he tells great stories about how they were all sitting there just waiting to die, basically. And he says it
Yeah.
was the worst thing you could possibly
It
imagine.
was the OPEC oil crisis around that time, I think 73. I'm sure, all sorts of geopolitical events going on. And it would have been the best time for anyone to have bought into any equity index anywhere in the world, especially the US. But it was a great time. And I think therein lies the paradox. When I look at a Forex chart, I strip away expectations of volatility. I see charts with actual chart patterns, charts with clean support and resistance levels, charts that still make trends. And over the decades since retail Forex emerged in the early 2000s, Forex has become a cheaper asset class to trade. The spreads have collapsed. Like, remember, a cheap spread used to be 3.5 pips on GBP USD and
Yeah.
Euro USD. And now it's like sub pip, 0.2, 0.4, maybe 0.7, depending on your balance and your broker. And it's consistent. And I think, are you looking for action, or are you looking for profit? And I think Forex still delivers that. It's still by far the most liquid market in the world.
Yeah.
By
Yeah,
volume.
that's true.
It's you know,
Yeah,
and
$4 trillion a day or something like that.
yeah, you don't have to be a Forex expert. You can just stick to the seven majors, just continue with your technicals. It's there. It can be part of, like, any broker account now. You'll get access to almost a bunch of asset classes, metals, equity indexes, and Forex in the mix. You don't have to just trade Forex. And I think if you want to dip your toe into the Forex waters, the seven majors offer enough variety there. When we talk about, for those that don't know, major pairs, anything against the US dollar, but the seven majors: Euro USD, Pound Dollar, USD CAD, Aussie Dollar, New Zealand Dollar, USD Yen, I think, USD CAD.
Right.
I don't know if I've counted them all, but yeah, there's the seven major pairs, and just look at them on the dailies and draw your support and resistance lines. Maybe stick some alerts in there to give you a little bell when something's getting close to it. There's a really nice base that's forming at this very moment on the daily on USD CAD. There were some fantastic long-term resistance levels in USD CAD that came off this year. There's a really nice base on Euro USD from that started in beginning of this year on daily again. These are real, these are real actual tradable opportunities.
Yeah. Yeah. Yeah, I would say with Forex, I mean, as someone who's basically a trend trader, the only currencies that really tend to trend are the US dollar and, to a lesser extent, the euro.
Yep.
And I own the only two currency pairs I trend trade are the euro US dollar, which trends very reliably when it's a long-term trend, or has done historically, and the dollar yen, which is a bit less reliable. But basically, you could just trade the US dollar index, and that would probably cover all your trend trading needs in the Forex market. The rest of it, like you say, is more about chart patterns and getting in close to turns at support and resistance level. So it can lend its hand very well to that. But I'd like to move away from Forex now and get into, as time is marching on, get into the US stock market and also precious metals, because putting Forex to one side, that's what's really dominating the market right now.
Yeah.
Of all, I mean, one thing a trader maybe sometimes forgets, but investors remember, is stock markets tend to grow up over time. And there's no stock market in the world that's been historically as successful as the American stock market. So trading US equity indices like the NASDAQ 100 index or the S&P 500 index, which is broader and not exclusively tech focused, this can also help put the odds in your favor. We've seen, because I mean, it's pretty amazing this year. The S&P 500 is up 15%. It's also up 15% just in the past 4 months. And here's a little statistic I'd like to share with you about the NASDAQ 100. Since it was launched in 1985, it's gone up by an average of 18%, a bit more than 18% every year. Over the same period of time, since 1985, the S&P has been up on average 13.2%.
Yeah.
So, these are pretty substantial average returns, aren't they?
Yeah, they are. They are. And the longer long-term average of the S&P 500 is, I think, hovering around 10.1%.
Yeah.
But still 13, but your 13%, the sample period that you're using for that is still substantial. Like I wouldn't argue with anyone who used that as a long-term average right now in terms of growth. It really is there. And the S&P 500 is in a really strange place at the moment. Like by any objective metric, it's massively overvalued. It's phenomenally concentrated. Like the top 10 stocks are occupying 36% of the S&P 500 in terms of valuation. Right. And it used to hover around, up until like, say, 2020, it hovered around 20%. So the top 10 stocks occupied like 20% of the index. And now it's jumped to about a third. And in terms of PE ratio, it's like, I think the third or fourth most overvalued time in history. I just looked up the PE ratio of NVIDIA. It's like 53, 54. It's bonkers. Wow. Like the S&P 500 has become used to be this broad measure of the US stock market. It's suddenly become a growth fund. Yet, with all that risk built into it, if somebody said, how should one trade the S&P 500 right now? I'd say it's in an uptrend, you buy the dips, period. Until you start seeing something else, that's it.
So I've been holding on to S&P 500 and NASDAQ 100 for quite a few weeks now, and it's been a great trade, and I'm still sitting tight.
Lunch is on you.
Lunch is on me.
Good for you, man.
Thank you.
That's why we do it.
Oh, I kind of assumed you were long too. I don't want to make you feel like you're missing out. But I mean, what I'll share a little day trading strategy, and this can be done in any kind of market, bullish or bearish. For the S&P 500, you can use the ETF, which is maybe the cheapest, or you can use micro futures or whatever contract your CFD broker uses. You just put up a half-hour chart, and you put up the relative strength index on 20 periods. So that's quite long, a bit longer than the usual 14 or 15. And you just use a half-hour chart, but just use it on a contract that only reflects the market hours, so you don't see the off-hours trading. Okay. So you'll tell a chart like that because it has some gaps. And whenever the RSI crosses to above 70, go long. And you can use a variety of exit strategies. But seriously, whenever you see that kind of momentum on the American stock market, it almost always goes up a bit more. So there's a great little day trading strategy I can share with everyone listening.
RSI 20 period, 70, 30, 70 on the level. As soon as that line crosses 70, go long.
Yeah. I don't, have a clearly defined exit strategy. You can work one out with that. But that's a nice little day trading strategy. Only on the long side.
30-minute candles on hours. Exchange hours only.
Yeah, on exchange hours only. So we're running towards the end of the show now. Unfortunately, the time has flown. So I did want to get into gold and silver before we wrap things up and move away from the S&P 500. Maybe there was more to say about that, but gold and silver, I mean, again, I'll consult my little stats on my handheld device. Gold and silver. Gold is up 45% this year to date. Silver is up between 60 and 65% year to date. And these are like, one thing I'm pretty evangelical about is trade commodities long when they're breaking to new long-term highs. This is another like excellent strategy you can focus on. Over recent decades, I mean, like trend traders will go short as well, but the upside on commodities, whether it's gold or silver or corn or cocoa, I mean, like last year or the year before, there was an amazing trade in cocoa. Commodities can double in value. Yeah. And if you get in on a good trade in that and you're set up the right way to sit tight, the amount you can make, the return you can make on these trades is phenomenal. I don't remember really talking to you about commodities much, Huzefa, but I guess you trade them all, right? I mean, I know maybe you're more stock focused, but
Yeah, I trade so I've got a watch list of 23 asset classes. Seven are currencies and a bunch of commodities and some equity indexes. And I've got natural gas and crude oil in there. But when my very first technical analysis course, late 1990s, and the instructor, it was a classroom style thing, 10 weeks, one evening a week, and he would print out charts, and we would have to mark with a pencil and ruler our support resistance lines and the trend. And what he would do is he would remove the labels, so we didn't know what we were looking at. We didn't
right,
know the time frame. We didn't know the asset class. It could be,
right, yeah,
it could be
that's
a
a good
commodity.
exercise. It's an interesting
Yeah,
exercise.
and it suddenly neutralized our view of everything else out there. I think trading and technical analysis in particular is a process of deletion. Like if you're a medical doctor, you're often trying to take as much information as possible about the patient. I think in trading, you're trying to figure out, okay, what do I need to ignore? What is it? What do I need to prioritize? And when I look at something like gold, silver, S&P 500, even the conversation we just had on Forex, what's the chart telling you? What's it doing? And gold, silver, S&P 500, you could be a Martian. You could look at that chart very first time in dealing with human civilization, go, oh, well, that's an uptrend. We should be buying that. And I think it's honestly, it comes down, I hate to say it, it's as simple as that, really. It really
Yeah.
is.
One thing I just point out, silver is not far from its all-time high, just below $50 an ounce.
Yeah, yeah.
And gold is also close to $4,000. And I think if silver hits 50 at the same kind of time that gold hits 4,000, we could see like a big profit-taking sell-off from there. So that's maybe something anyone who's
Yeah.
been long for a while might want to watch out for. But full disclosure, I am long of gold and silver, and the silver trade especially is bringing me a lot of joy whenever I look at it. Huzefa, are you long right now?
I
Come
am
on, be
indeed.
honest. You
Yeah.
are.
Yeah. I've taken some gold trades. I've taken some profits. Um, Same with silver. The other thing, I did one trade on the gold silver ratio. You can trade it as a CFD.
Right.
It broke support.
Yeah,
I
some
think it's
brokers offer that.
yeah, it's a good, again, in the end, the chart is a chart, and all of this stuff, man, the spreads are really tightened up. You can, with the amount of daily range we're seeing, the opportunities are there. So that's the one thing I'd add to those trades. And the money is made I consider myself, regardless of the experience I have, I consider myself a retail trader. And for retail traders, outside of some fancy derivative ideas, we're going to make our money in trends. That's really what we want to find. So whatever time frame we're looking at, there's a trend, let's take it.
Okay.
Yeah.
So let's turn to crypto now. Bitcoin, which has been kind of overshadowed for a few months, it was kind of threatening to break out, and then it really looked like it was going to break out. It did a fake out. It came down. It kind of languished. It hit some 2-month lows, I think. And suddenly, in the last few days, and while gold and stocks were going through the roof, and then suddenly, just the last 3 or 4 days, it's really come up. And the last time I looked, and of course, it's a very volatile instrument, it was trading at about 125,000. It just hit a new record high in the last few hours. And if it makes a strong daily close, if it makes a record high daily close today, I will buy some Bitcoin ETF. I don't quite want to go in as big as the futures are, even the micro futures, but
Yeah.
there's now an ETF for Ethereum, and there's a lot of talk. I think there's now just one launch for Dogecoin, and I can't remember. There's some regulatory change that is going to make it possible to have a lot of crypto ETFs now. So, are you going to be going long on Bitcoin? Do you add? Do you treat it as an asset class you look at?
I do. Yeah. Yeah. So honestly, my conditions for technical analysis for trading is the liquidity there. Like
Right.
technical analysis works when there's a crowd behind it. Really, technical analysis is tracking crowd psychology. So you need liquidity. So as long as
Yeah.
liquidity is there, it could be a stock, it could be something as different as a cryptocurrency, or whatever the case may be. So in that sense, yeah, absolutely. And then you just got to watch the cost of trading. Is the spread reasonable? Is the chart? The one thing about, I was going to say, if the chart is the chart too gappy, but if the liquidity is there, that takes care of a lot of the gaps. You just don't find gappy charts in highly liquid instruments. So yeah.
Right. Right. Yeah, like I said, I mean, I'll trade it. I'll trade just about anything because I'm basically a technical trend trader, and my kind of bread and butter is just watching the daily chart, commodities and stocks only on the long side. The only stock markets indices I really bother to trade are the American ones, the S&P 500 and the Nasdaq 100. So if Bitcoin does make a record high close tonight, I will be entering a long position, and my exit method is pretty straightforward. By the way, if you're interested in trend trading, the book that I've found the most useful is Trading the Trend. I think it's called Trading the Trend by a guy called Andreas Klenau, who's a Swiss fund manager who got into kind of giving a dose of reality to the high-end retail market. And he, shows that really what all the trend following hedge funds are doing, it's not that dramatic. It's buying long-term breakouts or breakdowns, and then using a trailing stop based upon the average true range to exit. And that's basically what I do. I use the tried and tested, very old-fashioned 3 times the 100-day average true range. So the beauty of that is, I sleep well. I don't worry about when should I make my exit. It's a hard thing to follow because I don't have a hard stop loss. It's just an end of day kind of thing. And you can have really be thinking, oh, whatever happens, I'm going to get a profit with this. But when you're long commodities, they can really move, unfortunately, against you as well as in your favor. But I mean, when you've got the kind of performance like we've seen with gold and silver, where gold's up 40%, silver's up 60% just this year, and they've been in long-term bullish trends for a few years now.
And look, if your position sizing is reasonable, that'll take care of any kind of, as long as you don't over commit to the trade.
Yeah,
you'll be in a good place.
Yeah, I mean, Klenau recommends using maybe 0.2% of your equity as one ATR on trade.
Okay.
So 1 unit of risk is 0.2%, 0.25%, and it's a great book because he runs these strategies with all kinds of different variables, and he'll show you graphs of how there's not that much difference between them, which gives you a lot of confidence in the concept of trend trading. Now we've got about really not very long, just another 2 or 3 minutes. But I wanted to ask you, Zephyr, is like, what's the basis of your trading methodology? Like, why don't you tell our listeners a little bit about that? Because go on.
Absolutely. Okay. So Sundays are my big planning day. Like Sunday afternoon, Sunday morning, depending on what's going on with the family. But I will put a few hours aside on Sunday. I will look at the economic calendar going forward for the week. I use Forex Factory. You can use anything you like. I find Forex Factory visually like so easy to read. Like the red, yellow, green.
I use it too.
Yeah. I print out the week's calendar and put it on a clipboard. Like I can't tell you.
That makes you feel very professional. You've got the clipboard. Do you have
anybody walking around with a clipboard means business. Like the second you're walking around with a clipboard, when my family see me walking around with a clipboard, they're like, okay, he's up to something.
Dad's busy, yeah.
Yeah. And it just gives me an idea of the week. And then I'm looking at the daily charts, sometimes the weeklies, but I have marked out my key support and resistance levels. That is like mandatory. And then there are some chart patterns that I particularly like. There's 2 candlestick setups. One's like a variation on an engulfing setup, and the other is a small variation on a pin bars. And I really like, once I've identified the direction of the trend, I really like support and resistance role reversal. So if you're trading an uptrend, resistance is broken, gets tested on the other side. I go from daily, I go straight down to like 15-minute. And that is, I could mess around with the hour or 4 hour, but I don't find there's not that much more information I get from that extra step. Once I've identified the hour, I go straight to 15-minute. Those two, for me, they pair up pretty well. I have a day trading strategy. It's pretty mechanical on the Asian, what happens with the GBP USD when it breaks out in the London Open. I used to trade it a lot when I was living in England. I want to program it.
That was very popular for a while.
Yeah. I stopped only because of time zone. Like when I moved here, I tried for about a year and a half to wake. Well, I did not even tried, waking up around 3 a.m.
Oh no!
Or 2:30. Yeah, it
Don't do it.
No
It
fun.
never works. Yeah.
Well, mate, the other things I read, like there's people I know who do night shifts here, and it just ruins their lives. Like people in manufacturing and transport, and like I read a study how it shortens people's lifespans as
Yeah,
well
yeah,
doing
yeah.
night shifts. And the second I read that, I thought this is just isn't for me. Like it's just not worth the sacrifice and quality of life.
Okay. Well, I'm
Yeah.
afraid on that less than positive note, or perhaps
So
it is positive because Huzefa isn't getting up in the middle of the night anymore, except to record this, of course. It is time for us to say goodbye at the end of this very first episode of Pairs of Aces. We'll be coming back to you in the next episode. We hope you've enjoyed it, and we really, really hope you'll be tuning into the next one. So it's goodbye from Adam and goodbye from Huzefa. We'll see you next time.
sounds like a plan. Take care, Adam.
And remember, if you liked and enjoyed our episode of Pairs of Aces, you can subscribe to Daily Forex's YouTube channel. Please add your questions for the next episode in the comments below.